Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who have subscribed to the channel. I really do appreciate it. For those of you who may be stopping by for the first time on this channel, it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks. That's what we cover here, dividend growth stock investing. I do dividend stock picks of the day, Monday through Thursday. This video here is an update on my portfolio. I do those every week. You can see them on Sunday. So I show you what I'm investing in. And like I said, it's stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks within the portfolio, or potentially adding new positions on a weekly basis. Pretty much I invest every week. A minimum every 2 weeks when I get paid, but I also do large purchases as well if I have extra funds. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. It's right out in the open. You can see everything I'm doing. I don't intend to ever have a paid Patreon account. We all have enough to pay for, so it's free to see what I'm doing in my portfolio. But if you would like to help the channel, dropping a comment, liking the videos, and subscribing helps the channel out tremendously. I also have a link to my Webull account down below. If you're looking to start your own investing journey, you can use that link. You'll get some free stocks when you sign up and deposit funds into the account. I will receive some free stocks as well. So it does help me out in that way. You don't have to use the link. No pressure. No big deal if you don't. But if you haven't started your financial journey, I would say get started. The sooner you start and the longer you invest and the more consistently invest, the bigger that snowball will be if you're a dividend growth investor, or the larger your portfolio will grow over time. Even though we're in a down cycle right now, in my opinion, is actually a great time to buy. Don't be afraid of a sale in the market. Seems to me the stock market is the only place where people see prices going down and they freak out and want to sell and get out of the market. If you walk into your grocery store and your groceries are cheaper today than they were yesterday, you probably may buy more groceries. If you walk into your favorite retailer, gun store, clothing store, shoe store, purse store, whatever you're doing shopping wise, if you see cheaper prices, one day you're more likely to spend more money there, not less. So I don't understand why people treat the market any differently. Your money goes further the cheaper the stocks are, and eventually they will bottom out and they will head the other way. This isn't the first downturn in the market. This isn't the first 20% downturn in the market. There have been almost a dozen downturns since the turn of the century, so over the last 100 years. So not a big deal to me, but here we are going to talk about the portfolio update. As I said, and as you can see here, we did add $1,311 in new funds to the portfolio. We also reallocated $5,394 as well, and those were the funds from me selling the store capital position. If you followed the channel, I covered what I was going to do with those funds, so you'll see that here in real time. That happened this week. I collected the last dividend. They're not paying a dividend anymore. They've been bought out. So I went ahead and sold them because I believe there are other opportunities. There is a thing called opportunity costs. So if you have funds like that where I was up and it wasn't going to go up very much more, their payout was $31.25 or $32.25. I sold out at $31.58, I believe what it was. You'll see here in a minute. But that's the reallocated portion of this. So let's jump right in. This is where I would typically show you if there were any dividends paid out, and the drip would have bought back into whatever company paid them out, and you'd have seen how many shares we picked up, but nothing was reinvested this week. Probably should be back at it next week. Here is Friday, where I sold store capital. This was at the end of the week. You will see the first purchase was actually at the beginning of the week, so the funds in the second purchase will be from this sell right here. And note, sold $5,394.93. This will match up pretty closely. I believe it's a couple pennies off here whenever you see the buys that were associated with this sell. So we sold 171 shares. There are some fractional shares that'll kick in here probably at the end of the beginning of next week. Usually the whole shares will sell off sooner, and then the fractional shares will come a little later. As I said, we sold out for $31.55. So the largest this will sell out is $32.25. That is the payout whenever they bought the company out, at least right now, unless they back out of the deal or something. I don't think that's going to happen. So again, it gave us $5,394.93, and we did get the last dividend payment here. That ex-dividend date was Thursday, so I think we'll get around a little over $70 in dividends from this here in the future. Now we jump into, like I said earlier in the week, on September 26th, we added $1,311.36 to the portfolio, and with those funds, we bought 2 shares of AT&T, ticker T, at $15.88. This is an existing position, and just $15.88 is, in my opinion, very cheap for AT&T, and it has a very nice dividend yield. Right now, it's over 6%. So, in the communication sector there. We opened this position in Whirlpool earlier in the month, so we're continuing to build out that position, and it has continued to pull back. So we picked up 2 more shares of Whirlpool Corp, ticker WHR. This is a consumer discretionary sector stock here. You probably are well aware of what Whirlpool is, right? They sell washers, dryers, refrigerators, home appliances. And we picked up those 2 shares at $139.02. In my opinion, anything under 160, 155 for Whirlpool is a buying range, but that's just my opinion. We picked up 3 more shares of Prudential Financial, ticker PRU. This is out of the financial sector. We picked up those shares at $88.58. This is another one that's pulled back significantly. I'm going to continue to nibble in here and add 1 or 2 shares whenever I have some extra funds. Enterprise Product Partners, we added 5 shares there, ticker EPD, at $23.36. Another one, very high yielding stock. This is out of the energy sector, oil and gas supplier, supplier. So they pulled back below 25. I like them under 25, right? Cisco Systems, we added 5 more shares of Cisco Systems, ticker CSCO. This is out of the information technology sector. We added those shares at $40.89. And our last purchase for September, it was actually our first purchase. These are in reverse order here. But our last purchase here we'll cover was 11 shares of Enbridge, ticker EMB, another one out of the energy sector. This is a Canadian company that provides a lot of oil and gas here up in the north and northeast. United States as well as Canada. So really like them. We picked those up for $37.69. Anything under 40 is a buy for me in Enbridge here. It's getting pretty close to being built out. You'll see that here in a minute. I did get this to 100 shares with the proceeds from store. So let's look at that. And if you remember, $5,394, I believe it was like 95 cents or 96 cents, something like that. So it was just off by a few pennies. These are basically the proceeds from the proceeds from store. Selling out of that position, and we just put these funds right back to work. We picked up 1 more share of AT&T, ticker T, at $15.45. In the previous slide, you saw it at $15.88, so it did continue to pull back. So we'll just add there a little bit more. 2 more shares of HPQ. This is another newer position, and I'm sorry, AT&T is out of the communication sector if I didn't mention that. HPQ is another newer position that we added about the same time we added Whirlpool, early in September there, I believe. And we added 2 more shares there. Ticker HPQ is out of the information technology sector, and we added those at $25.60. This is also a recently picked up position for Warren Buffett. I think he picked these up in the first quarter, and I believe he was around $24, $25 whenever he was buying them. So really like this price. Anytime you can get a Buffett stock around what he paid for it, I think you're doing okay. Picked up 28 shares with Realty Income, ticker O, at $58.04. Another one that's pulled back. This is in the REITs and real estate sector here. So we added a significant portion, $1,625 to our Realty Income position. This is also a monthly payer here, so really like that. So that increased our position significantly. Not quite 200 shares, but we are getting close. LyondellBasell Industries, we added 29 more shares there, ticker LYB. This is in the material sector. You will see the material sector has grown. REIT sector has backed off a little bit in overall allocation. Material sector has grown because of the sale of store and also the big purchase here in LyondellBasell, ticker LYB, again out of the material sector at $75.52. Extremely big pullback. These 29 shares that we added here did actually take us to 100 shares and some change with fractional shares from reinvested dividends. So we're at 100 shares of LyondellBasell Industries, and another one we got to 100 shares this period was Enbridge Inc. You saw 11 shares there previous. We added 40 more shares of ENV, again out of the energy sector, at $37.85. So I added $1,512 there, $2,190 to LyondellBasell. So these are all very nice yielding stocks here. Again, AT&T is above 6%, Enbridge is above 7%, I believe. LyondellBasell is above 5%, Realty Income real close to 5%, HPQ is down there in the 3s. So added nice dividend yield to the position. You'll see that. Let's jump over and check that out. A quick overall look at the portfolio, high level view. Current total value is $76,762.26. Feel like we've been stuck around $76,000 to $78,000 for a little over a month now. As the market continues to pull back, even though I add to the position, it continues to drop. We are down 12% overall in the portfolio now. But the dividend yield continues to go up. We are now at 5.563% in dividend yield. Annual dividend income, this is what it's all about. This also continues to grow. We were right around $4,100 last week. Now this week, with the reallocation and the additional adding of that $1,300 in new funds, we are at $4,270.01. And this continues to grow. Annual dividend income, truly passive income in the form of dividends paid out by the portfolio, whether the market's up, whether the market's going down like it is now, whether the market's floating sideways. This annual dividend income continues to increase while I increase my funds into the portfolio, while the dividends within the portfolio pay out dividends and buy more shares, and as companies increase the dividend as they make dividend increases. Several of those have come out this year in several of the stocks that I own. Usually Realty, for example, does one every month. I mean, it's fractions of a penny, but when you do it every month, it does add up over time. Now we'll run through the sector allocation real quick. Communication sector sitting at 9.04% of the portfolio. Consumer discretionary sitting at 7.31%. This one's getting larger as we add to Whirlpool. Consumer staples is 5.97%. I would like to build this out. You'll have to check out the stocks I'm going to be buying, or stocks I might be buying. I will be buying in October. One of them is Procter & Gamble, so that will help build out this consumer staple sector right here. Energy is sitting at 9.24. You saw several purchases in energy with Enbridge and Enterprise Product Partners this time around, so I'd like to keep this one right here in the 10 to 11%, so I probably add a little bit more to energy, but I don't mind it. 9.24 isn't terrible. Financials is sitting at 15.83%. Healthcare is 11.24%. This little sliver here, 0.27%, is industrials. This is another one that will be on my stocks to buy for October watch list. If you haven't watched that video, go ahead and check it out. It came out today, which is September. I'm recording this today. You'll see this video on October 2nd, but on October 1st, I did put out the 4 stocks that I'm going to be buying for October video, so go ahead and check that out. And another one in there is Union Pacific, so that will help increase this little sliver right here. Then we have technology sitting at 9.18%. Materials, like I said, has crept up a little bit as REITs and real estate has gone down. This was above 20% last time. Now it's at 17%. This is REITs and real estate. This is utilities, nothing in utilities, and this one here is materials. So with that big purchase of LyondellBasell, you see this has gone up. Materials. This is a little higher in materials than I want to be, so I will probably back off the materials sector for a while and try to even this portion of the pie out a little more over here, maybe a little bit more into Verizon, maybe AT&T. Consumer discretionary, like I said, Whirlpool will naturally go up as we add here. And consumer staples, Procter & Gamble, we're looking to add here. Industrials, we're looking to add as well with Union Pacific. So go ahead and check that video out if you haven't done it already. And that is really the end of the video. What do you think of the portfolio update? Let me know. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. How did your portfolio do this week? A lot of red most of the week. I think there was only 1, maybe 2 green days. So I'm sure you're down like everyone else. Don't get discouraged. Like I said, just keep dollar cost averaging in. It will bring down your cost basis. Your yield will increase. You'll increase ownership in those stocks over time. That's what it's all about. And eventually the market, like I said, will bottom just like it has before, and it will rebound And just as long as you keep doing it, your cost basis will be down enough where eventually it will catch back up to itself and you'll be on the winning end at the end. So that's what it's all about. Like I said, drop a comment down below. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and let me know. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you the next time. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek advice counsel of a certified financial advisor.